Welcome to the channel. I'm James, and today we are looking at the Walt Disney Company, ticker symbol DIS. They have just recently had earnings, and we're going to see today if this stock is a buy based on those latest earnings. What we're going to be doing is going through, looking at their revenues, looking at their profits, looking at their free cash flow, then using this updated information to give the new fair value of Disney using discounted free cash flow models and the Buffett-Graham intrinsic value. Is this stock a buy or a sell in 2022? So just quickly, what's happening with Disney in terms of share price? It's actually had a bit of a down year, down about 18.5% on the year. You can see they got absolutely hammered and was even down as low as about 128. But with some good speculation on their earnings, the share price did increase then, and earnings was good. They beat earnings, which we'll be talking about very soon, and the share price is now at 152. If we just take this out a little bit longer and look to where it was at the bottom of the pandemic, it was $80 a share. Broke some pretty strong highs, but then dropped back down to pre-pandemic levels. But can this stock get back to those previous highs? That's the question we're going to be answering today. So firstly, what was the revenues of Disney? Well, if I take you to the financials, this is on the quarter end. So quarter end of January 2nd, 2021 and January 1st, 2022. Revenues is up from 16.2 billion to 21.8. So that is a 34% change. So that is excellent to see. And if we look at how that revenue is broken down, it's broken into two main segments here: the Disney Media and Entertainment Distribution sector and the Disney Parks Experiences and Products. And obviously Disney Parks are getting opened once again. So that is very, very good news and why investors are bullish on the stock. But what happened in these two segments? Well, the Disney Media went up about 2 billion, 12.6 billion to 14.5, so that is about a 15% increase. And the Disney Parks Experiences and Products has doubled, 3.5 billion to 7.2, and that is without parks being fully open. So expect this number to go up massively, and then the share price hopefully will do the same. If we just quickly go to Yahoo Finance, this is the 2018 to trailing 12 months. The trailing 12 months is updated with the latest earnings. So you can see revenue is up massively from where it was in 2018. 59 billion, 69 billion, 65, 67, and now 72. So this is one of the greatest years for Disney in terms of revenue. So things are looking good there. So if we search for net income, this will give us the profit for the quarter, 1.152 billion compared to 29 million. So that is up a massive, massive amount. And if we just have a quick look at Yahoo Finance and see what the profit's been doing, this is on the annual level. 12.5 billion in 2018, 11 billion in 2019, pandemic year minus 2.8, then 2 billion in 2021, and that has now gone up to over 3 billion. So it's increasing the right way, but still a long way away from it was in those pre-pandemic years. Next are Disney buying back their shares, and we can see here they've actually issued new shares, gone from 1.5 billion to about 1.8. And if we look at their financials again, you will see that they're actually increasing shares. This is from the previous quarter, 1.812 billion to 1.819. So Disney are issuing new shares, which is bad for investors in some ways, but if they can use this to raise capital and then in turn invest that capital correctly, it can raise the share price dramatically and start paying dividends and things like that, which shareholders will like. And finally is the free cash flow increasing, and on for this quarter it is actually negative, minus 685 million and 1.2 billion. So free cash flow for the quarter is negative, but if we go to Yahoo Finance and see what it is for the year, it is 1.4 billion. Not looking too great. 9.8 billion pre-pandemic. 2019 they had a lot of expenditures, payment, a lot of debt. You can see here on the repayment of debt was up massively. 3.5 billion, 1.9 and 1.4. So this has a very, very high free cash flow ratio, which we will definitely have to take into account when we are looking at our discounted free cash flow models. So if we look here at the future free cash flows for Disney, this is calculated based off 2018 and 2021 numbers. You can see this is only estimating 2.6 billion free cash flow in 2025. What would that give us a share price? Well, that would be $37 a share. But we are not expecting them to get around 2.6 billion in free cash flow. We are expecting around 9 billion based on their previous estimates, or based on their previous numbers before the pandemic hit. So if we were to rejig the numbers a little bit and get this to their previous margins, which were around about 80-90%. This is 80%. This is 2022 with about 9 billion increasing. This would give Disney a share price of $148 a share, which means about fairly valued. If they were able to get back there a lot quicker and generate more cash flow, because they should have more revenue. They should have more profits. Their revenues are up way higher than what they was. So let's say they can get about 95%, which is still 10 billion in 2022, $176 a share. And if they could even blow it out the water again, say 100%, let's just say they had 11 billion. This could be a 20% gainer, $185 a share. But this is based on them getting back to their net income that they were doing previously before the pandemic. And if we look at the Buffett-Graham intrinsic value models, this takes earnings per share and expected growth rate into account. Currently, Disney has quite a low earnings per share of $1.69, but analysts are expecting 40% increase over the next 5 years. What does that give us? Well, $147.50 a share, which is a minus 3% discount. So both of the models are saying the stock is around about fairly valued. On the more bullish cases on free cash flow, it's saying it's a buy, but that is still a very bullish case where they need to get back to their previous profits very quickly. So the models are saying it's fairly valued. If the stock can drop down below, I would say definitely buy it. But with Disney, there is a lot of what ifs. I do like the stock, but as per the models, it does not seem a solid buy. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.